Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you've joined us for the third day of our Precious Metals and Critical Minerals Conference. The next presentation of the day is from STLLR Gold. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I'm very pleased to welcome Alan Candelario, VP of Investor Relations and Corporate Development of STLLR Gold, which trades on the OTCQX Best Market under the symbol STLRF and on TSX under the symbol STLR. Welcome back, Alan.
Thanks, Lily, and thanks to everybody joining the call. STLLR Gold, for those that you don't know, and for those that do know about it, we see ourselves as one of the most intriguing gold stories in our sector, and we believe we have the biggest upside amongst all the gold developers. And I'm going to walk you through the reasons why and why we're excited for the next year ahead of us. So what sets us apart? Size and scale. We do have one of the largest gold mineral resource inventory amongst all developers, 16.6 million ounces of gold in the ground. And we have from two of the largest gold projects in Canada, each capable of 250 to 300,000 ounces a year of annual production. Valuation, we're in a gold bull market, yet the work that we've done to technically de-risk our assets, to put them in good shape over the last 12 to 24 months, we think it's underappreciated and not reflected in our share price. But that means that presents an immense upside opportunity for those coming into the story. Just trading alongside our peers, we believe can be a 10-bagger potential from current levels. Cash flow. This morning, we made a big announcement. Our Hollinger tailings project was selected as the project to receive a permit under the new recovery minerals regime in Ontario, allowing for the expedited permits and one step closer to free cash flow. So that's something that we are very excited about. We're a story that next year we could be generating cash. And finally, jurisdiction. We believe Canada continues to be a very coveted mining jurisdiction. It's going to be a battleground for assets. We have a stable mining jurisdiction, no security risks, like we've seen with our Mexican counterparts. And when the largest South African producer, when the largest Mexican precious metals producer come to Canada and acquire assets in this great country, it just tells you that the assets are very prized and valuable. So this is our asset portfolio. We have three valuable assets within STLLR. Our main flagship is the Tower Gold Project, one of the largest undeveloped gold projects in Canada, capable of 273,000 ounces a year for over a generation. It's got 11 million ounces and growing. So that is where our focus is on. Colomac is another significant asset in the Northwest Territories, which we think is the next mining jurisdiction with 5 million ounces, but 1,000 square kilometers of underexplored greenstone. And last but not least, also in the Timmins mining camp, Hollinger tailings project. It's a tailings recovery project with 500,000 ounces that we can get to cash flow as soon as next year. Like I said, one of the largest mineral resource inventory amongst gold developers, 16.6 million ounces. Majority of those ounces are open pit ounces, and a good chunk of it is in the indicated category. Now, if you were to look at our ounces in terms of discovery cost or replacement cost, it costs about $100 to $150 per ounce to make the next new discovery. So if you're going to start a company from scratch and you want to build it up to 16.6 million ounces, it's going to cost you close to $2 billion in exploration costs, G&A costs. And that's why you see in our industry, it's much more economic and cheaper for majors to acquire ounces rather to drill and find the next ounce of gold. And this is what underpins the value of Stellar Gold. Here's the landscape of Canadian gold projects under development, from the smallest to the largest. Now, there's only 6 projects in Canada capable of 3 million ounces of life of mine potential production, 270,000 ounces of average annual production in gold over a 10-year mine life. And Stellar happens to have 2 of them, 2 of the largest, 2 of the top 10 gold projects in Canada. Now, if you look at the other names, some of the names here are familiar, especially some of the smaller names that have much larger market caps than ourselves. We believe it shows the immense value, immense upside opportunity for Stellar investors. And another way to look at it is a comp table. So table on the left are the notable large-scale gold projects in our industry. These projects are capable of 250,000 ounces plus of average annual production. You can see that on an enterprise value to total resource basis, they're trading roughly north of $200 on a per ounce basis, whereas Stellar Gold is trading at $10 per ounce basis. This is what I was talking about. A lot of the work that we've done to technically de-risk our assets are underappreciated and not reflected in our gold price. But we believe this is also what provides an immense opportunity to bridge that gap between ourselves and our neighbor. If you even get halfway to where our neighbors, our peers are trading at, that's 10-bagger potential right there. I look at the names that are up there, including Skeena, which is close to 4 billion market cap, Snowline, 3 billion market cap, Perpetual, 5 billion market cap. Their potential to 10x from here, sure, there's a possibility. But if you look at names like Stellar, I think we do have much more upside from current levels and where we're trading at. And another way to look at it, acquisition ounces of Canadian gold projects, on average, it's $113 per ounce US. That's another metric that underpins the significant value and upside for Stellar Gold and our assets. Balance sheet, we do have a strong balance sheet with $45 million of cash. That gives us enough cash for the next 2 years, if needed, to continue our activities. If you look at our shareholder base, 26% of our shares outstanding are owned by 2 of the biggest names in the gold sector. Eric Sprott owns 15%. Agnico Eagle owns 11%. We completed a financing in October of last year where they participated and increased their ownership, providing further validation on the work that the management team's done and of the potential that lies ahead with our story. Our strategy going forward is simple. For Tower, continue to de-risk it. Continue to get to shovel ready. Because our peers are trading at much higher valuations, mainly due to having a feasibility study in hand, permits in hand, and we have a game plan to get there within the next 36 to 48 months. Hollinger tailings, continue to permit that towards our recovery permits, which we hope to get sometime next year. And that would be the catalyst towards getting us to near-term cash flow. And Colomac has significant value. We have 5 million ounces of Colomac. We're going to continue to advance it as we can. Our priorities right now are on our assets in the Timmins Gold Camp, Hollinger, and Tower. But we are open to different ideas, different structures, different ways to extract value out of Colomac. Now here's the famous Timmins mining camp. Over 80 million ounces of gold has been produced in the camp. And It's been producing for the last 100 years. It may continue to produce for the next 100 years. Hollinger Tailings Project is located closer to the city of Timmins on the left-hand side, and Tower is on the eastern portion of Timmins on the right-hand side. You can see our project and our claims are in gold, and our second largest shareholder, Agnico Eagle, is in blue. So we own 11 million ounces in the gold, but within that oval, you can see right now there's potential for 20 to 30 million ounces of gold. We believe that at some point, some way down the road, this whole land package is going to be consolidated, which gives you the potential for more than 50 years of mine life, probably more than 500,000 ounces of annual production, and maybe the largest gold mine in Canada down the road. We recently revamped the PEA last summer. G Mining Services, which is a reputable firm, helped put together our mine plan and economics. The physicals are solid. You got 273,000 ounces of gold over 20 years. And we believe that's just scratching the surface, and it has the ability to be scaled up larger than what it's currently planned. At $3,200 gold, the after-tax NPV is $2.5 billion. We strongly believe that our project is leveraged to the gold price, because for every $500 increase in gold price, you'll see a commensurate increase in the NPV of $1 billion. At $5,000 gold plus, where gold is trading at right now, the value of our project is north of $6 billion US after tax NPV. When it comes to metrics, again, G Mining Services assisted us with a mine plan, the costing, the capital. These are real world defensible numbers and are benchmarked against recent mine builds. For example, initial CapEx is coming in at $1.9 billion. One of the last mines that came into production in Ontario was Equinox's Greenstone mine, which G Mining Services assisted in the engineering of. That project was built with an initial capex close to 1.7, 1.8 billion. So we look at this as a PEA, not just as a PEA, but a PEA plus with numbers that demonstrate real world economics and real world costs. Majority of the production comes from open pit mining. So it's a combination of open pit and underground that gets us close to 1 gram per ton to the mill at a 93% mill recovery rate. We believe the 11 million ounces is just scratching the surface. And here we've identified targets to continue to expand mineralization in some areas that are higher grade, near surface style of mineralization. So we believe that the production profile can go beyond what's been outlined in the PEA. And when it comes to Hollinger, like I said, today we announced that the Ontario Ministry of Energy and Mines has granted the first recovery permit to STLLR Gold for its Hollinger Tailings Project. There's a lot of backing, there's a lot of support to clean this project up. And it's a win-win scenario because we believe it can generate close to $2 billion of free cash flow. So right now we put out a resource estimate showing close to 500,000 ounces at a grade of 0.36 grams per ton. And there's close to 50 to 60 million tons of material in the facility if you continue to drill areas that we weren't able to cover last year. We've done met work on the tailings, and we received close to 61.3% recovery rates using cyanidation, which is the common mining processing processing type for the mills in the area. There's close to 6 million tons per annum of excess mill capacity within 20 kilometers of Hollinger. So there could be a win-win scenario with the mill owners and with STLLR Gold. We're open to various ideas to help fill that excess mill capacity. And this is a 100-year-old site. Like I said, we do have a lot of support from the city, from the province, from the stakeholders. If we don't clean this up now, this 100-year-old site will continue. But I believe that with all the support that we're getting, with gold price and where it's at, we can generate this liability into something that's of significant value to the STLLR Gold shareholders. Colomac is in the Northwest Territories. We have close to 1,000 square kilometers of underexplored greenstone. It was a past-producing mine in the 1990s when gold was $400 per ounce. It produced close to 500,000 ounces. Since then, we've put together the land package. The site's been remediated. We've been drilling, and we've delineated close to 5 million ounces in that box in the middle. But we believe that's just scratching the surface because the land package itself is 3 times the size of the Timmins camp. Although there's a lot of value in it, we still think of this as an exploration play and an option play on the STLLR name. In 2023, we put out economics, a PEA on it, that showed attractive economics at $2,000 gold. Those numbers obviously need to be refreshed, but the solids are the physicals are solid. Again, it's 300,000 ounces of annual production over 11 years. Most of the ounces are in the indicated categories. So if we were to fast track this to shovel ready, permits in hand, we believe we could do so at a smaller scale project. But that's something that we are continuing to evaluate internally. In 2023, we did a drill program. We intersected multi-ounce hits near the Colomac main deposit at a time when nobody was really paying attention to gold stocks. That would have been a great drill result for these times and shows the exploration upside and the high-grade potential of the Colomac Gold Project. And finally, the management team. We have a strong management team that has accomplished a lot with mine building experience, operating experience, project financing, permitting. Our CEO, Kayvon Soleil, was involved in 6 mine builds during his career and was part of the team that built the last mine in the Timmins mining camp. So we have the team that has de-risked these projects, that have cleaned it up, and we all are now the team to be able to drive it forward and to continue to de-risk it to shovel ready. That's STLLR Gold in a nutshell. Again, size and scale, 16 million ounces and we have 2 of the largest gold projects in Canada. Valuation, we're trading at $10 US per enterprise value per ounce. This is a fraction of where our larger scale peers are trading at, and we believe that is the opportunity. Bridging that gap means 10x, 20x from current levels. Cash flow potential, huge announcement this week, receiving our permits for Hollinger. We believe we can fast track the permitting for Hollinger and get it to free cash flow as soon as next year. And jurisdiction, Canada is a coveted mining jurisdiction, going to be a battleground for assets. Recent acquisitions from majors outside of Canada are coming in, picking up assets, which shows you the amount of value of Canadian gold projects. And from there, I'll jump to Q&A. What are the key takeaways from investors from your recently filed 43-101 for the Hollinger tailings project. Key takeaway is the fact that there's 500,000 ounces, 500,000 plus ounces, that the mineralization for Hollinger is very consistent, very homogeneous. It's well mineralized from top to bottom, which is perfect for a mining scenario. And the recovery rate's 61.3% for cyanidation. That's very good for tailings reprocessing. We also achieved even higher processing rates, recovery rates for flotation, because there's not only is there gold in there, but there's also silver, gallium, a little bit of sulfur, which could be marketable and economic at current prices. So those are the key takeaways for the Hollinger 43-101. Where are you in the permitting community engagement for Tower and Colomac? For Tower specifically, we've been advancing. The environmental baseline work is ongoing, which we kicked off in September last year. We are constantly in community engagement ever since we took over the company 2 years ago. Discussions are ongoing, discussions are positive, and kudos to our VP of Sustainability, Megan Shannon, and her team to be able to drive those discussions. So for the most part, both those aspects are driving ahead. Nothing to report as of now, no milestones yet, but the discussions are trending positively. With respect to Colomac, community engagement is important. Even though we're not as active as we were in the past, we continue to collaborate with our Talicho First Nation neighbors, as well as other community members, to keep them up to speed, to just show them, hey, there's a lot of value in these assets, and we do have every intention to move them forward at the right time. So we're keeping them up to speed. We're keeping close ties with them. Those discussions haven't stopped at Colomac. What are the catalysts for re-rating for Stellar over the next 1 to 2 years? When it comes to Hollinger, big announcement this morning. That's one check mark off the list of check marks that we're looking at to get to cash flow. We believe we can get there as early as next year, and more updates to come from the company on Hollinger. Now, what's important is where to place those tailings. Like I said, there's excess milling capacity within 20 kilometers of Hollinger. We believe there's a win-win scenario with the mill owners, and obviously we